All right, all right, all right. Want to welcome everyone to the Pilla Tax Academy show, where we have our incredible national expert, Mr. Dan Pilla. He's really world renowned when it comes to the topic of taxes and the IRS, this big three letters, Dan, that we keep hearing about, that's causing havoc in people's lives and in their mostly in their emotional lives. You put out a statement the other day, and it says, I'm going to quote you on this, Dan. If you don't know the information from this briefing, you will get in trouble with the IRS. What do you mean?
Well, first of all, let me welcome everybody to the webcast here, Jay. Just like you, I'm very happy to be here, and I'm happy that you've all taken some time to join us here tonight. And I appreciate the kind introduction, Jay, but I'm not so sure it's worldwide as far as being renowned. Now, certainly, I've got a lot of experience in dealing with the IRS, but let's be frank now, it ends there, Jay, just with the IRS. But all of our listeners here, if you've got a pulse and you've got a business in the United States, you need to know about the information that the Pilla Tax Academy brings to you. So there's my little bit of introduction, Jay, and now let me get specifically to your question. Millions of businesses took paycheck protection loans from the government starting in about mid-April. And I don't know what the numbers are exactly, Jay, but there's tens of millions of businesses that took loans from the government, and millions of those businesses are small businesses. And as a matter of fact, that's what the whole Paycheck Protection Program, or what we call PPP loan program, was all about, helping keep small businesses in operation in general, and in particular, helping those small businesses keep their employees on the payroll during all the pandemic COVID-19 shutdowns that occurred throughout the country. And of course, we're back into that situation right now. So millions of small businesses have taken these paycheck protection loans. There are millions of small businesses now that are going to be doing their taxes here as 2020 comes to a close. And there's a series of briefings that I want to bring to these small businesses through the Pilla Tax Academy that's going to keep them out of trouble when it comes to their Paycheck Protection Program loans. There's a lot of confusion, Jay, out there about some of the aspects of these loans, and this is what I want to straighten out starting tonight. And over the next couple programs, we're going to talk about this very specifically, because there's stuff that people need to know, and I guarantee you, Jay, there's small businesses out there by the millions that don't know this stuff.
You know, what's amazing is that something that seems so simple all of a sudden seems like it's got so complicated. You sent me a message the other day, and you were pretty emphatic about, we got to do a show about this ASAP and alert people, because there are so many people that took these loans. Do we have any idea the number of people that happen to take these PPP loans, Dan? Do we have any idea?
Well, yeah, we do have an idea, Jay. There's north of 10 million of these loans that were granted. And it's a couple $100 million. There was, I think the number, because they funded it twice, and I don't have the numbers right in front of me, and so I'm going off the top of my head here as far as the amounts. But I think it was about 1.1 or 1.2 billion dollars. Right. Let's just call it right at the $1 billion mark that was used to fund these loans. And there were tens of millions of businesses that qualified for these loans. You had to have under 500 employees, and there was a number of other factors that had to come into play. But primarily, this program is pointed at small businesses in general. Self-employed people as well could take these loans, even though it's called paycheck protection. And the idea was to keep your employees on your payroll. Even self-employed people with no employees could qualify for these loans, and millions of them took these loans, Jay. So there's a tremendous number of people out there that need to know the information that we're going to be sharing here tonight.
Well, this is important, because since I did that post, questions have come in, and I want to encourage everyone to make sure that you go over to the Facebook page. So facebook.com/Pilla Tax Academy. And, if you got questions and things that are coming to mind, we bring these questions up on the show. And if you got a question while this show is going on, make sure in the chat, put your question in the chat. We'll do our best to try to get to it. We got a limited time. We're going to get into it. But then we got some questions that have come in I think are critical for people to get answers to. Here we go. Millions of small businesses got PPP loans, Now, aren't these loans forgivable? That's the biggest question we got coming in, Dan.
Well, yeah, and in fact, Jay, that's the core of what I want to talk about tonight is the forgivable aspect of these loans. The fact of the matter is, Jay, that the Paycheck Protection Program loan had a number of very, very positive benefits to it, not the least of which is that the loan was forgivable. All right, the loan is forgivable as long as you use the money within a certain period of time and you use the money specifically as required by law. Now, here is one of the sources of confusion, Jay. The Paycheck Protection Program, the PPP program, was changed in midstream. The Congress first passed the CARES Act that took effect in late March, and then they came back. They came behind that with the Paycheck Protection Program Flexibility Act, which was passed and took effect in June, very early June. And so there's some confusion out there about that. But the central core answer to the question that you just raised here is yes, the loan is forgivable, but you have to use the money for certain specified expenses or it's not forgivable.
So what you're saying is that brings us to this question, just to get clarity here, Dan. Is it true that there were restrictions on how the money could be used? Can we get a little bit more detailed on that?
Yeah, it's absolutely clear that there's restrictions on how the money can be used. What changed is some of the ratios. And so what I'm going to do is I'll start with the way things are now, and then I'll work backwards a little bit so that we've got some understanding. Right now, if you received a PPP loan, you have to spend 60% of that money has to be spent on payroll. So you got to use it for your employees. If you're self-employed, the net income to a self-employed person, Jay, is considered payroll. So you can actually pay yourself under the PPP program, and that constitutes qualifying for that 60%. So at least 60% of the money has to be used for payroll. The rest of the 40% of the money can be used to pay interest on mortgage loans that existed before February 15th of 2020. Now understand that there's a restriction here, a second restriction within that topic, and that is you can't use the money to pay principal on the loan. You can only use the money to pay interest on the loan, Jay. So that's number one. So we got payroll, we got mortgage. The next thing is rent. You could use the money for rent or lease payments on rental or lease agreements for business property that existed, that if those agreements were in effect before February 15th of 2020. So the key date with respect to mortgages and interest and loan agreements, mortgage agreements and rental agreements is it's got to be in effect before February the 15th. And then the last category, so there's 4 categories. The last one is you can use the money for utilities. But again, it's got to be for business property, utilities for business property on business leases that occurred or rental agreements or ownership agreements that were in place before February 15th. So February 15th is the date. That's the date. Everything had to occur in terms of your mortgage, your rent, or your utilities had to exist in pursuant to agreements that were in place before that. As far as the payroll is concerned, all right, what you have to do to meet the requirements for the payroll is and again, we're using the 60% number because that's the most recent one, but I'm going to work backwards a little bit. If you got your loan on or after June the 5th, or let's just say after June the 5th, then the 60% rule absolutely applies. All right. So there's no question about that. 60% of your money has to be used for payroll. And again, as a self-employed person, that can include payments to yourself. Now, okay. So now you got to maintain the same level of employment. There's some fluctuation there. We're not going to get into all that, but you got to basically maintain the same level of employment that you had in 2019. So the year before. So those are the restrictions. Now, let me go backwards here one step. And that is, remember, the Paycheck Protection Program started in April. They changed the law in June. So if you received your loan between April and June, then a 75% rule applied. And the 75% rule says that you had to spend 75% of your PPP loan proceeds on payroll. However, you have the opportunity to change to the 60% rule between you and your lender remember, these loans are backed up by the SBA, but SBA lenders make the loans. So banks make the loans. But you can agree with your lender to change that rule to 60% if your loan was funded before June the 1st. So in answer to the question here, yes, 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 there are very specific limitations on how that money can be used, and you have to spend the money within those four categories. And if you don't, then you risk that all or part of your loan will not be forgivable. It's forgivable, Jay, when you meet those four requirements.
Now, you mentioned, I want to clarify, mortgage. So each one of those all have to do with business. When you said mortgage interest, is that like on a mortgage from a business, or could a person use that for their house?
Well, it's mortgage, primarily mortgage on a business, Jay. That's what it's all about. So it's got to be business property. And so if you've got a work truck, for example, let's say you're a contractor and you have a work truck and you got a loan on that work truck, and that truck is used for your business. It's a contractor's vehicle. It's a truck used specifically for business. In that situation, the interest on that truck can be paid with a PPP loan. All right. If you've got a building that you purchased and you're operating your business out of a building, you're paying a mortgage to a bank, the interest on that loan can be funded with PPP money. But again, you got to separate between interest and principal. The principal can't be paid with PPP money, Jay. Only the interest can be paid with it. So this is some accounting gymnastics here that has to be done. That's going to be one of the things that we talk about in future programs here, is how to set up this accounting, how to make sure that your accounting is done right here, so that we do the segregations that have to be done, because this is very important. What we talk about tonight is going to lead into that.
This is beautiful. To get this information, knowledge is power, but only applied knowledge is going to give you the results you want. So you got to apply what you're hearing. And most people don't even have the knowledge to apply. That's why this is so important. Can y'all do me a favor, all the viewers that are listening in? Every one of you have contacts on your social media that own some type of business. They need to know this information. Would you please share this with them? There's a share button right now. If you're on Facebook, you can hit the share button, put it to your page. You're going to help save someone some pain from getting, I call it blindsided, Dan. If they don't get this information, people, from what I'm hearing from you, are going to get blindsided. Does that kind of sound about right?
Yeah, that's exactly right, Jay. Blindside is a good word, because listen, you don't know what you don't know, right? And when it comes to the Internal Revenue Service, we've got a tax code that consists of more than 4 million words that was changed more than 5,900 times since 2001, and that doesn't even count all of the changes that were brought about by the CARES Act in March of this year, March of 2020. And one of the biggest changes, of course, is this PPP program, the PPP loan program. And it's huge and it's convoluted, and the pot has been stirred a number of times here, Jay. And this is why I want to do my best to bring information to our viewers here tonight and over the next couple of weeks that are going to help you if you took one of these loans. I promise you, if you don't take careful note of the information that we're going to provide here tonight and over the next couple of sessions, you're asking for trouble. But listen, the IRS has made it perfectly clear. And in fact, I wrote an article on this today, and I'm not even quite done with the article yet, but I'm about to tie a bow around it tomorrow. The IRS has made it perfectly clear, Jay, that they are ready, willing, and able to run ongoing audits on these PPP loans. I wrote an article for my newsletter back in August that identified some of what the audit targets are going to be, but there are more now that have surfaced in the last few weeks. We'll talk about why that is tonight, for one reason. And then so the IRS has made it clear, Jay, that they're not just simply going to look the other way on this PPP stuff. There's too many of these loans out there, and the potential for abuse is too big. And so the IRS is going to very aggressively look at this stuff. And you, as a small business person that took one of these loans, man, you need to know this stuff. You just absolutely need to know this stuff.
You know, we got Bob to put a question in on the chat here. He said, including interest on assets? That was his question. Well,
and you get a loan to buy an asset, right? We talked about a truck. We talked about a building. Those are assets, right? So when you get a loan to purchase equipment, then yes, the interest on that loan can be paid with PPP proceeds, as long as you're not paying the principal. All right, so you got to be able to segregate between principal and interest, and this is going to be one of the audit targets. Jay, is your bookkeeping clear enough to establish that the money you spent that the PPP money you spent was not used to pay off the principal of any note? Has to be used only to pay off interest. Now, remember the ratios. The ratios are fundamentally critical. 60% of that money had to be used for payroll. If you're self-employed, payments to yourself can constitute payroll. That's not a problem. But 60% of the money has got to be used for payroll, and then the remaining 40% can be split between those three things that we talked about: interest on loans, rent on business property or equipment, and utility payments for business facilities. All right, that's how the breakdown is.
All right, this is getting great. And I'm getting a lot of great feedback. People are excited. Here goes another big question. And because it's coming in, I'm getting to watch this as these questions come in. And there seems to be a lot of confusion, Dan, about whether expenses paid with PPP money are deductible. What can you tell us about that? Because that's a big one.
Well, I'll tell you what, that question hits the bullseye too, Jay, what I want to talk about tonight. Because here's the thing, people, there's a lot of confusion about this. And a lot of people think that, well, I paid business expenses, and so you claim a deduction for your business expenses, right? If you're a small business and you're paying salaries, labor, as we know, Jay, as you well know, is the single biggest expense that any business faces. Large business or small business, doesn't make any difference. Your labor costs are your most intensive cost. There's no doubt about it. And then facilities costs and your debt service for your loans and so forth. These are huge items. And these things, Jay, that you pay, your mortgage interest, your rent for your facilities, your payroll, these things are tax deductions, right? You get a deduction for any ordinary and necessary expense incurred in connection with the operation of your business, as long as that expense is incurred for the purposes of earning income. Well, certainly, if you've got people working for you, they're working for you to produce income. If you're buying tools and equipment, you buy that tools and equipment to produce income. If you have a business facility, an office, a warehouse, a production facility, you have those facilities for the purposes of earning income. So any expenses incurred in connection with any payments incurred in connection with those facilities are deductible. And so people are saying, well, I should be able to write off the payments that I make with PPP loan proceeds. But Jay, this is the problem, and this is where people are going to get trapped. In May of this year, the IRS issued a position paper that said that they will not allow a deduction for any expenses paid with PPP money if the loan was forgiven. Now, that created a large explosion of controversy. You probably don't remember this, Jay, but I've been, this is one of the things I do is watch these debates in Congress and pay attention to these knuckleheads going back and forth and arguing about this stuff. And somebody, and I forget who it was, and it doesn't matter, but somebody was shaking their fist and saying, how can the IRS come out with such a ruling? This is contrary to the intent of Congress. Congress wanted these benefits to go to small businesses. They wanted these benefits to go to small businesses specifically so businesses could overcome the problems associated with all the COVID shutdowns. And now the IRS is not going to allow a deduction for these expenses. How can that be? And some of the folks came back and said, well, the IRS is wrong about this. And somebody said the IRS is right about this. And, well, I did an analysis of this question myself. And I'm telling you, Jay, the IRS is correct. Listen, it's not my job to defend the IRS. And I'm not in the business of telling people how great the IRS is. But the fact of the matter is, in this particular instance, the IRS is correct. All right. So here's what I'm saying to you, is that you cannot claim a deduction for any expenses you pay, business expenses you pay with PPP loan proceeds. You cannot. Now, the IRS issued this position in May. I wrote my position paper on the question in June. It was published in my newsletter. The IRS just came out now, and I'm talking about last week. And I'll tell you how current this information is that our viewers are getting right now. The IRS's most recent position paper is dated December 7th, all right? It's not December 7th yet, Jay. And so this is how far ahead of the curve we are here at the Pilla Tax Academy. It's not even December 7th, and we've got authority from the IRS that's dated December 7th. Here's my point. The IRS issued a revenue ruling. The revenue, and I don't want to get too technical and detailed about this, but here's all you need to know about a revenue ruling if you're a layperson. A revenue ruling is the IRS's opinion on what the law is, and it is a clear statement as to how they're going to enforce the law in certain fact scenarios. And their position in this revenue ruling, Jay, is that any proceeds that are used to pay business expense, or let me rephrase that and say that that business expenses that are paid with PPP proceeds cannot be written off your tax return. Now, there's a logical reason for that, Jay, and if we can get into that if you want to, but we don't really need to dig too deeply into that. It gets a little bit technical. I can make it simple, and you just tell me if you want to go down that road. But the bottom line is this: the IRS has made it perfectly clear in this new revenue ruling that they will not allow a deduction for expenses paid with PPP proceeds. So you're going to have to, and we're going to talk about this in future programs here over the next couple of weeks. You're going to have to set up your record keeping. You, as a business person, you absolutely better set up your record keeping so that you can distinguish between expenses paid with PPP money and expenses that were not paid with PPP money, because the IRS is going to look at it.
This is great. You know, we're getting some good feedback on the chat board. Again, guys, share this stuff. Now, there's a lot of stuff happening on Pilla Tax Academy. There's great information, great content, and also great programs. Dan has done mastery classes that I believe if you have a business, you got to make sure you don't miss out on the business owners tax mastery course that Dan has done. It's almost done being fully edited. It'll be available. You can pre-order it now over on PillaTaxAcademy.com. We've also got one for tax professionals. There's a lot of activity over on the Pilla Tax Academy Facebook page coming in from tax professionals, from CPAs, accountants, enrolled agents. You guys, I would tell every one of you, you need to have the Tax Defense Conference. Get that program. It comes with 12 continuing education credits. That's available to order. It's going live. I think it's going live within the next 96 hours. So be ready for that. And then you got people that are just everyday taxpayers that don't want to get blindsided. Well, you got the Taxpayers' Rights Mastery course. You don't want to miss that. That's available for pre-order. These things are going to roll out in the next couple of weeks. You can get a discount right now. So you can take advantage of discounts by going ahead and ordering before they all roll out. So get over there. So Dan, you got a great question here. See how you answer this one. Has the IRS spoken up on these points that you're talking about?
Yeah, the answer is yes, Jay. And in fact, I've got right in front of me here. I've got the IRS's position paper on this issue. And just because the viewer asked the question, I'll give you the number here, and anybody can go on the IRS's website and get this information. All right, it's new information, as I say. It's dated December 7th, and I've got it already. But it's available on the IRS's website if you know what to look for. And this is the problem, Jay, is most people don't know what to look for. But this is revenue ruling. All right, revenue ruling 2020-27. All right, that's what it is. Revenue ruling 2020-27. It's dated December the 7th. It's actually issued, it was issued earlier this week. I got a copy of it right away. And the question that is answered, that is asked and answered by the IRS in this revenue ruling is whether a taxpayer that received a guaranteed paycheck protection program loan under the CARES Act and paid those business expenses with that money, is that taxpayer able to deduct those expenses in the year the expenses were paid? Now, ordinarily, Jay, as I said, if you pay mortgage interest on a business loan, if you pay utilities on your business property, if you pay salaries and wages and compensation and commission and so forth to your employees and so on, all of that stuff is normally and legitimately 100% deductible on your business tax return. All right. In fact, any expense, Jay, that's incurred by a business for the purposes of earning income is deductible. And certainly those four categories of expenses fall under that ordinary and necessary test. No doubt about it. But the fact of the matter is, here's the problem. Again, as long as the question's been asked, let me drill into it. Under normal tax law rules, when you go to the bank and get a loan for $50,000, Jay, you don't have to claim that loan proceed as income, right? You get a loan from a bank. The 50 grand the bank puts in your business checking account is not income. You don't put it on your tax return. Likewise, when you pay the principal of the loan back to the bank, you don't get a deduction. And there's no confusion there. You can't write off the principal payment because you never had to recognize the 50 grand loan proceeds as income in the first place. If you got to write off the principal payment, it'd be a double dip, right? Now, you do get to write off the interest. There's no question about that. So you get a business loan from a bank for 50 grand. You're paying, whatever the amount of interest is every month, $1,000 a month, whatever it is, the interest is deductible. But now, here's the difference between a Paycheck Protection Program loan and the ordinary garden variety bank loan for your business. When you qualify under the CARES Act for special treatment, let's just call it special treatment for a moment here. When you qualify under the CARES Act, by having spent that money in those 4 areas that I talked about, in the ratios that I talked about, you qualify to have that loan forgiven. Not the interest on the loan, Jay, the principal. So if you get a $50,000 PPP loan and you use the money 60% for wages and the rest of the 40% for those other 3 items, you get the loan forgiven. You don't have to pay back a dime. So now think about this. You didn't have to recognize the 50 grand as income when you got it. You don't have to pay the 50 grand back. Why logically should you get a deduction for the expenses you paid with the 50 grand? That would be a double dip. So in this area, Jay, in this one area, I agree with the IRS. And that might sound bizarre because I don't spend much time agreeing with the IRS. But the fact of the matter is, Jay, even a broken clock is right twice a day. Right? And so they are correct in this regard. Their legal analysis is accurate. You don't get a deduction for these expenses. And even if I thought the IRS was wrong, even if my opinion was that the IRS is wrong, it doesn't matter because they've issued an opinion that's perfectly clear. And the only way to challenge that is by challenging it in court. And I promise you, your viewers don't want to end up in tax court here over a dispute on the deductibility of a PPP loan. The fact of the matter is, with the state of the law the way it is, the way the Paycheck Protection Program is set up, and the way that basic tax law has been interpreted for coming up on 70, 80 years now, you're not going to win the issue. All right. I don't believe you're going to win the issue. Now, that said, Congress could change the law. And that's very possible because actually the CARES Act itself that was passed in March that created this PPP loan does not say one way or the other whether you get the deduction or not. It does very clearly say that if you pay back the money or if you use the money in accordance with law, you don't have to pay it back. All right. So the law is clear about that. So based on that foundation, Jay, I think we're chasing a ghost here if we say that, well, I'm going to fight this. I think this deduction should be allowed. It's not going to be allowed.
Wow. This is great information. Listen, Dan, you talked about you got a paper in your hand that's dated for December the 7th. Now you got your hands on it already. Is this are these type of insights and getting ahead of the curve are things that people can look forward to on the Pilla Tax Academy?
Yeah, absolutely, Jay. If you subscribe to our business owner master course, for example, one of the things that we're going to be doing on an ongoing basis is putting up videos and research reports and articles and so forth that will give business owners this kind of information. Listen, Jay, this is exactly the kind of work that I've been doing for more than 40 years. There's tax preparers on every corner, and there's tens of thousands, literally hundreds of thousands of competent tax preparers out there that know how to fill out the forms. But this is a different area, all right? This is the area of tax resolution and in particular, avoidance of problems. And this is where I live, Jay. I've spent 40 years litigating on behalf of small businesses in every kind of tax case you can imagine. And this is the stuff I like to bring to people. It's one thing to solve a problem, and that's gratifying for me. But people, people don't want to have problems in the first place. You want to solve it, or do you want to avoid it? Obviously, anybody with any sense wants to avoid the problem. So when you follow us over the next couple of programs here on the Pilla Tax Academy, I'm going to show you. I'm going to break this down in detail and show you how to avoid these problems in the first place. Because this is the kind of stuff that I've spent my career helping people to stay out of trouble with the IRS. And this is one time where we've got this golden opportunity to tie a can around these things on the front end before you have any trouble.
Right. This is awesome. So guys, to be able to keep you up to speed on what's going on, you want to be plugged in to all of these different channels that Dan has on the Pilla Tax Academy. So here's a little boost that we're giving folks. We're gonna have some fun with this. There's a $100 Amazon gift card giveaway if you are exposing the Pilla Tax Academy. Now check this out. If you go over to the Facebook page, and as soon as we're done here, you can check it out. There's a post now that describes how the contest is going to work. It's going to run starting from today to the end of December. It's a $100 Amazon gift card giveaway for free. All you got to do is you go there, you click on the link, and you'll see this on the PillaTaxAcademy.com website. You also see it right now over on the Facebook page, and you get points. It's gamified. And so if you just simply subscribe to the Pilla Tax Academy YouTube, you get points. If you like the Facebook page, you get points. But you got to do it through the contest link because it's going to track everyone's points. So you just got to do it through the contest link because it'll track the points. Now, if you like the Facebook page, you're coming down through the whole system here, and you like it, you get more points. If you follow Pilla Tax Academy on Instagram, yes, even got an Instagram, you're going to get points. If you download, listen what's happening here. If you download one of the 3 free reports that Dan has done on PillaTaxAcademy.com, you will see 3 different free reports there. If you download one of those 3, you're going to get points for the contest. Viral share is what's critical here. Each person you refer to do the contest, if they just simply go register to do the contest, which means they click the link and they sign up and they registered for the contest, you get booster points. So you're typically getting 1 or 2 points every time you do one of these things. But if you get someone to sign up, you get 12 points. So for every person that you have in your social network that they share the contest, you get 12 points. If you subscribe to the updates on the website. So Dan's giving updates all the time, and you can get the updates and know what's happening. You're going to get points. If you complete all of those, you get 30 bonus points. And so we expect there's going to be people going out there getting hundreds and hundreds, if not thousands of points, simply taking advantage. And why is this beneficial to you? So not only is it a cool contest, somebody gets a $100 Amazon gift card. I mean, everybody's using Amazon. But on top of this, you're going to be plugged into what's happening as this platform expands. The key is the IRS going away anytime soon, do we expect? I don't think so. Maybe, Dan, you can answer that question, but I don't think so. So next question we've got, Dan, is I used 100% of my PPP loan for payroll. Is that okay? That was asked by Anita.
Yeah, Anita, it absolutely is okay. And in fact, that's probably the safest place to be. Remember, depending on when you got your loan, well, let's just use the 60% number because that's where most people fall. A minimum of 60% had to be used for payroll. But if you used 100% of it for payroll, nope, that is no problem. That's the sweet spot. Just remember, though, Anita, you cannot now deduct those payroll expenses from your tax return equal to the amount of PPP proceeds you used to pay the payroll with. So you got to have, and we're going to talk about this. I'm not going to get into this tonight now because we're going to have in one of the future programs here in the next couple of weeks, I'm going to have a detailed discussion of what you need to do as far as your bookkeeping is concerned to make sure that you stay out of trouble here and set that up so you can survive an audit if the IRS looks at it. So bottom line is yes, 100% is good. 60% is good. 100% is better. Put it that way. No question about that.
Awesome. We got this question from Scott. How does this work for self-employed people that work from home?
Self-employed people, as I said, the IRS bases a PPP loan on your 2019 net profit. So for example, if you're a small business person, you file a Schedule C with your tax return. That is to say, you don't have an entity, an LLC, a corporation, or anything like that. If you had any of those things, your loan had to go through that entity rather than through you personally. So let's just talk to the self-employed people that use the Schedule C. They report their income and expenses on their own 1040 tax return. And so let's say you had $100,000 worth of gross receipts. That was your gross income to your business. And let's say you had $30,000 worth of expenses. So your net income was $70,000. That's what you lived on. That's essentially what you paid yourself, because that was the money left over after all your business expenses were paid. That's the number the IRS used, or I should say the SBA used, for purposes of figuring your PPP loan. All right, it was your 2019 business profit. In the case of a corporation, for example, that paid wages, the SBA used the amount of wages paid in 2019 to figure the loan. But you didn't pay wages because you're a self-employed person, sole proprietorship, doing the work yourself, but your net business income is effectively your wages for purposes of this loan. And so that's how it's funded. Now, as long as you use your proceeds to pay yourself, just like you did in 2019, you're doing it in 2020, as long as 60% of that money went for your own, what amounts to your own payroll, right? Your net profit, your own payroll, then you're golden. Now, as far as the loans are concerned, if you're talking about interest on your home, and you're claiming a deduction for an office in your home, which is very common for small business people. In fact, in my small business master course, we've got a great deal of discussion in there on the home office. And so let's just say, for example, you're using 10% of your home for business, as long as you qualify for a legitimate deduction for your business use of your home. 10% of your mortgage interest would be deductible on your business tax return, your Schedule C. And so that would be the ratio that you could use for PPP loan, PPP mortgage interest. But again, remember, you can't pay principal with it, only mortgage interest.
Got another question here from Gwen. She says, what is the time frame? How many weeks for the payroll?
The reason I'm stammering here is because there have been so many changes. I'm just going to use the rules that are effective after June the 1st. All right, you had to use the PPP funds within 24 weeks of the loan being funded, or by December 31st, 2020, whichever comes first. All right, so basically the money has got to be used by the end of the year, if not sooner. So figure out the day your loan was funded, count forward 24 weeks. That's the day the money has to be used. If the 24 weeks falls after December 31st, then December 31st is your deadline. So you've got another 3 weeks basically to spend. Well, what are we here? The third, Jay, or the fourth? You've got almost 4 weeks to spend the rest of the money if you still have PPP proceeds on hand.
Here's the big question, Dan. This is what it all comes down to. It's all kind of awesome information, great feedback we're getting. What should businesses do to literally protect themselves?
As I said, we're going to have continuing programs over the next couple of weeks that will flesh that out. But for purposes of what we're discussing tonight, for purposes of this specific issue tonight, you need to make sure that your bookkeeping is set up in such a way that you can demonstrate that you're not claiming a deduction for expenses paid with PPP proceeds. If you have a bookkeeper or a CPA that you're working with, you need to sit down with that person tomorrow. Do it tomorrow. Don't wait for 3 weeks and say, look, I know that I can't write off these expenses. So we got to make sure that my bookkeeping is set up such that we, A, don't claim a deduction for these expenses that we paid with PPP proceeds, and B, we can demonstrate to the IRS that we didn't claim a deduction for these items. All right. So you have to do this immediately. Now, if your tax pro, and I'm not saying your tax pro is going to do this, but if your tax pro tells you that you get a deduction for those expenses That tax pro is absolutely wrong. Wrong, wrong, wrong. And I want you to write this number down again and have this available for the tax pro if there's any questions. It's Revenue Ruling 2020-27. This is the one they just came out with, all right? I have it in my hand here, and you can get it off the IRS's website. Now, it's a heck of a read. I'm not saying you shouldn't read it, but it's a heck of a read. And frankly, if you're interested in this kind of thing, it's a good read. You know, this is, I curl up in front of the fireplace with this crap. But the point is this: don't let any tax pro tell you that your expenses are deductible if they're paid with PPP loan proceeds. They are not. N-O-T, not. That's the biggest thing I want to give to you, to our viewers tonight, Jay. And then, as I said, over the next couple of weeks, I'm going to flesh this out in more detail, because there are some circumstances, now that I've given you all the bad news, there are some circumstances under which these loans can be written off, all right? I've just spent, 20 or 30 minutes here telling you they can't be written off, but there's another IRS ruling. There's another IRS ruling. I got the second one in my hand here too. This is also dated December 7th, all right? So we're ahead of the curve on this one as well. There are circumstances where you can write it off, but we're going to get into that in the next program.
Yeah, this is awesome. You know what? If you guys really, really understand the power and appreciate and have an appreciation for what you're hearing tonight, what you're hearing, you got to make sure you give us a little feedback. This is a free show, but you can tell this is literally worth thousands of dollars to get this information. Do us a favor, put a comment in. If you're on a social media platform here, just type in a comment. Tell Dan you appreciate him. Tell him you appreciate the Pilla Tax Academy. Give us a little feedback, because that's how we're able to understand if people really appreciate this type of information. I believe everybody appreciates it that's hearing this. I am impressed by the information. You know, Dan, what's happening in the next edition is going to be awesome, because you're going to be talking more on this subject. But I think that piece of paper that you held up has got something to do with the next session. What else, Dan, can people expect that's coming up? You know, what can we expect? This is a big topic.
Yeah. Well, there's a couple things. Let me give you a preview here. In the next session, we're going to talk about the IRS's second ruling. There's two rulings that are in question here. I went through the first one tonight. We're going to go through the second one the next time. The second one is going to deal with people who do not have their loans forgiven, all right? If your loan is forgiven, then what we talked about tonight applies to you. If your loan is not forgiven, then the next program we're going to talk about applies to you. And then I'm going to talk about what the audit targets are. And I don't mean audit targets for I'm talking about PPP audit targets. If you took a PPP loan, you've got an audit target on your back, whether you like it or not. And I'm going to explain what those audit targets are, and I'm going to show you exactly what you can do to protect yourself from the IRS. All right. And it's not just the IRS, friends, it's the SBA as well. Both the SBA and the Internal Revenue Service have laid out audit criteria here already. And I'm telling you, and I wrote this in my article today, I believe that the PPP loan program is going to be subject to a great deal of scrutiny for the years to come. I don't think this is here and gone. This is going to be something that the IRS is going to be looking at for years to come. So you need to know this information if you took a PPP loan.
This is awesome. Again, guys, show your appreciation. Comments are coming over. One really stood out to me from Gwen Willock. She says, Dan Pilla saved us from the beast. I tell everyone they need to contact him if they have IRS issues. Dan's been, she said you saved her from the beast, Dan. I mean, how do you feel about that?
And I remember, Gwen, and we worked together years and years ago, and I appreciate that. But let's go to this next step. I mean, let's stay out of the clutches of the beast. All right, don't get yourself into a situation where I got to pry you away from the beast like I did with Gwen. Let's keep you away from the jaws of death. Let's say, huh?
That's awesome, guys. We'll be posting. Stay plugged in to the Pilla Tax Academy Facebook page. Get all kind of updates. Go through the contest. We just posted it on here. You can see the link. Get plugged in. That way you've got all of the different mediums where we're pumping out information to keep everybody up to speed. And for goodness sake, get over and get on one of the mastery courses. If you're a tax pro, I can't imagine you not having the Tax Defense Conference, which is the most powerful tax defense strategies, in my opinion, and many others in the country. So get over there and get that course and get you some continuing education credits. if you are a small business owner, you want to talk about one of the best tax deductions you could probably make. And let's see if Dan will validate that. If they buy your business owner tax mastery course, Dan, can they use that as a tax deduction?
Yeah, absolutely. Absolutely, Jay. Any expense that you incur as a business for educating yourself on dealing with the IRS or spending money to defend yourself from the IRS is a tax deduction. Absolutely.
This is awesome. And for everyday taxpayers, listen, we didn't get taught any of this grades 1 through 12. I don't know if you got that class. Everybody I talked to, I said, did you get taught about this important issue called the IRS and the Internal Revenue Tax Code? And everybody says no. I said, okay, they waited to tell you in college. And they say, no, I didn't get it there. I'm like, are we liable for it? Yes. Do we understand it? No. Dan says, how many times have they changed the tax code since 2000?
5,900 times, Jay, since 2000. More than 550 times in 2005 or 2006 alone. I mean, it's just massive. We got 4 million words. And I'll go one step farther. You talk about not getting tax education in grade school, 1 through 12. No question. You don't get the education in college. There's no doubt about that. You don't get the education in business schools. You could be a graduate of some of the best business schools in the country. You're not going to get this education. But I'll go one step farther. You go to law school, Jay. You go to law school, tax and tax compliance that's an elective in law school. You don't even have to go through tax courses to graduate from a law school with a law degree. And in fact, a good friend of mine that's been with me for 20, well, more like 35 years as an associate with my Tax Freedom Institute, my Association of Tax Professionals. Her name is Patty. I was on the phone with her today. She's from out east. She's a CPA. She was trained as a CPA, got her CPA's license, then went to law school, right? So she got her law degree after she had her CPA's license. So she looked at the tax curriculum in law school and she told me, these are her words, it was a complete joke. It was an absolute complete joke that this, and it was elective at that. So the bottom line is you simply do not get this information anyplace else.
It's important to understand that this Pilla Tax Academy, I believe, is going to become a movement. I believe it's going to empower so many people. I believe it's going to educate people like never before. And we appreciate Dan Pilla for pouring his heart, his time, his effort, and energy into this. He's passionate about it. We've got some specials coming out where Dan and we did a kind of like a talk show set live, and we had it recorded. And I can't wait for that to come out and you guys to see this, where Dan just went nuts on freedom and liberty and talking about his dad. Wait till you hear the stories about his dad, even his son. It was just incredible to hear how this has all come together. So Dan, it's been a great show. Do you have any parting words for our viewers today?
Yeah, I got parting words. There's no such thing as a hopeless tax problem, Jay. I don't care what your problem is. I don't care how long you've had it. I don't care what you've done to fix it. I don't care who's told you you can't fix it. There's no such thing as a hopeless tax problem.
That's awesome, guys. Give us a little love. Share this with your friends, your family, anybody that owns a business. Share this with them. This is critical information. Get over to PillaTaxAcademy.com. Get yourself plugged in. Get into the free contest here. We're going to be back here next week with more powerhouse information. Dan, thank you. Thank you to our viewers. We will catch you next week. Bye-bye.
Good night, Jay. Thanks to all you viewers. God bless you all.
Thank you.